trade around its all-time high, with gold prices also trading at its all-time high, all in anticipation that Fed will be even double-size cutting rates this month. We're going to be looking at some of the stocks that we have been covering in this channel, a lot of winners, some losers, and also a few of them that are still trading at buying area. We're going to be looking at what are the ones that are still trading in buying area, potential buying opportunities based on the BGS 20 strategy. Let's kick off. My name is Les, I'm Chief Analyst of BG Trading Australia. Remember, this is not a financial advice, just as from BG Trading, sharing with you how we trade stocks here at BG Trading together with our VIP members to chase 20 to 40% profit with 1 to 3 months with very tight stop loss. Normally, we use a multi-dimensional trading approach, which includes technical analysis, essentially buying stocks at technically discounted price, but stocks which have strong fundamentals or strong fundamental outlook as well, reported reasonably well or has been improving its fundamentals over the years. And then we finally match with positive macro outlook that could affect that particular sector, which the stock that we are trading. So if you like the video, please subscribe to the channel right now. Share this video with someone that you believe would be interested, and let's kick off. The first stock we're going to be looking at is IDP Education, which the SX code ticker is IEL. So let's take a look on the chart formation. And this is, I'm going to start with the stocks that I think still in the buying area and the reasons why. So IDP Education is a stock that has fallen quite substantially over the years. So unfortunately, so for anyone that's holding this stock for the long term, has taken a very, very deep fall right there since 2021. The stock has fallen about 90%, giving or taking. But as you can see, in the last few months, we have what we call potential bounce. And the couple of indicators that I noticed here is the RSI has sort of formed what we call bullish divergence, and there on the long-term downtrend means that we could have exhaust the sellers. So that has been sold the most, and potentially we have what we call a reversal right there. So according to BGS 20 strategy, the first thing we're going to be looking at reversal indicators, which is right here, as you can see, bullish intersection level 1. Now the stock's trading above the short-term moving average, which is exactly where we wanted to be holding or to be positioning ourselves according to BGS 20 strategy. Now, the fundamentals of this company is still not improving dramatically, but since the stock has fallen 90%, it's sensible to see that it's offering not only fundamental value, but strong technical value. The outlook now for the next 12 months could turn into a positive, because as we can post-election period around the world, most likely we will see some immigration policy improving in the major markets which IDP Education operates. So a bullish intersection level 1, RSI positive, and then also if you look at this chart formation, we can see what we call breakout of these downtrends using BGS 20 strategy. Then we also have a breakout of this level here, which was broken around $5, now trading around $5.50, and still considerably below the long-term moving average. That's where it shows that the stock is offering strong technical value, not only fundamental value, but also technical value. The long-term moving average, it's currently trading at $8, actually $9.47. So $9.47, right, from this current price, so it means a 69, like 70% upside, right? 70% upside from the current price. So that is compelling upside, provided that we had some very good green tick here on the chart formation. So I really like IDP Education. We are currently holding. We positioned ourselves for this at beginning under, like, I was about $40.70 when we bought the stock. Then we took this upside here. We closed our position and we positioned again. We bought it again, and we believe we could see a potential further upside for this stock based on the chart formation, based on the fact that there has been highly oversold. So that's what I will be expecting with IGP Education based on this strategy, and speculating that the macro outlook could improve post-election period, especially because major economies like US, Canada, Australia, it needs to run the country. We all know that, and there could definitely, any change in the policy could be a positive catalyst for IGP Education, where we saw Japan improving its immigration policy. Then the stock has jumped quite substantially, and now we could see the same in other countries. If that happens, that could bring easily IGP Education towards a $10 level, at least to test this long-term moving average, which by the time my projection reached there, would be trading around $9, which is still 60% upside from the current price. So undervalued. For me, it is a buy opportunity still at the current levels. Now, let's talk about Polynovo. Polynovo stock that we have been trading. We're currently holding Polynovo at 30% profit. We bought at technically discounted price based on very strong fundamental results. The company has increased its profitability. We have full dedicated analysis for this particular stock into our stock library. So anyone that is VIP member watching this video, make sure you take a look there. So then what we're looking at Polynovo right here, and I've seen a lot of bearish talk about Polynovo, but this chart formation is very constructive right there. As you can see, the RSI showing clear bullish divergency, and then we have what we call here a higher low right there. Based on this reporting season, the previous reporting season, we saw a strong stock price activity, and looking at the Heikin, we can see here the momentum it's still building towards the upside. Why Polynovo is still trading at technically discounted price for the long-term trend, offering strong technical value still, even though it's trading above the short-term moving average. But if you have a little bit of patience and want to place a trade that it's based on a long-term moving average, so Polynovo still could be a buy, even though we are already up by 30%. So I think this stock could well reach $2 in the next few weeks, maybe in the next few months, based on this, not only on this chart formation, but based on also strong macro outlook for this particular sector and this particular company itself, and also the technical formation showing technical value at the current levels. Just so to put in perspective here, you can see that those strong candles, which shows a strong momentum on the upside, it comes on a higher volume, right? And you can see the volume has increased dramatically compared to before August, which means this period here from August 18 to September 16, we see a strong interest on this particular stock, and that shows that investors or traders are beginning to be far more interested than they were back in July, June, and August. So still, for me, buying opportunity, just gotta be careful. You're not going to be wanted to be buying at the top of those ranges. There's strong volatility on this stock, but I would be looking at buying more if I was going to buy. I was just going to hold for now what I have, but I'll be looking to buy around this $1.45 or below if I would not be holding this particular stock. Again, this is not a financial advice. You gotta do your own due diligence. But buying stocks that offer strong fundamental, technical, and strong outlook is not much of a brainer. And that is what has been leading our winning trades most of the time together with our VIP members. So if you are interested to have access to those stocks, all the stocks that we are buying before we buy, so Polynovo could have taken 30% with us. So take a look on our website, bgtrading.com.au, our VIP membership program. Then we'll be having access to all our entries before they happen, with all the trading setups and much more. Now let's talk about loser here. So Botanix, the ASX code is BOT. So this is it is a loser. It has reached our stop loss around 14 cents, and unfortunately, what happened here? So we bought based on this fall here. Right, the stock has been falling quite substantially, but when we did the analysis, we highlighted the fact that Botanix had still a lot of fundamental struggles, and the big speculation was whether the company, Botanix, will have enough funds to fund its business before it becomes profitable, and that's why the market has been selling the stock since February, March this year. We bought around about 15 cents, and then we lost 1 cent right there on the stop loss because this was a breakdown to the downside. If you look at on the Heikenach, you can see the momentum was increasing here. Now we had a little bit of consolidation right there, but still, I can highlight this breakout of this support level there, and until we see a solid recover, at least above this support level, then we're going to be staying out of Botanix for now, simply because it doesn't tick all the boxes. Fundamentals still weak, right? Technical part of the stock is offering technical value, but fundamentals are weak, which means we placed a speculative trade, and there was that fell on our stop loss, unfortunately. So we're gonna leave there for now, even though it is a technically discounted price. We're just gonna leave there for now, simply because multi-dimensional trading approach isn't that working for Botanix at this stage. Now, the next one is Bubs Australia. Bubs Australia is a stock that has been giving us about 54% profit this year, simply because we traded multiple times Bubs Australia. It is a slow mover. It is a stock that not many retailer investors are interested on, but the company has turned into a profitable company, $5 million profit. But also because Bubs Australia is waiting for FDA to issue a permanent trading approval, so Bubs can keep trading in US permanently. If they happen, and combine that Bubs still trading at technically fair price, I think at these levels, Bubs is still a buy. As you can see there, we have a what we call stop loss based on our latest entry at $14.50. So just gotta be mindful that a stop loss there, we don't want that to break down to 12. But even though, if it breaks down to 12 and they get this permanent approval to keep trading in US, then we will see a huge upside. And I also think Bubs Australia could be a takeover target since they are now profitable for FY25, and potentially they will be even improving its profitability in FY26 if our projection is correct. Slow mover, not very exciting, but a company that has delivered strong results historically and has been trading around $1 in the past. Not much a brainer on this one, in my opinion. So you just gotta be careful with the stop losses if you need to protect the capital. Now, next one we're going to be looking at, it's Northern Star, NST. This is another stock we recently bought at $16, right? Now it is at $20 with 30% profit right now with this particular stock. And we're going to be keep holding as long as gold prices remains high. So let's take a look gold prices right now as we speak. Gold prices continues to head high. Northern Star is a leading gold producer in Australia. It's this fall here, 30% fall in July, happened because the company did not report as good as expected due to some maintenance problems on their production, but that already happened. That has already priced in, and that's when we decided to buy Northern Star once again, because we already locked a profit on Northern Star early this year, which I can confirm that our profit was about on Northern Star. So we pretty much locked about 95% early this year in April. And now we once again be able to not lock another 30% if we sell today. We're not going to sell today because gold prices continues to move high. So why would we sell a winner like this? So strong fundamentals ahead, strong macro outlook with gold prices continues to head high in expectation that Fed will cut rates and dollar will depreciate value even further. Now, the technical formation is favorable. I actually expecting Northern Star to reach around $22 right there and potentially break to a new all-time high, which in this case could even bring Northern Star towards $30 a share. Will that happen? I don't know. We're probably going to be locking in our position just under this long-term resistance level right there at 50% profit. But if gold prices at least stays at the current level at 3,690 US dollars, then it's sensible to say that Northern Star likely to break out through the upside. And not only Northern Star, but many other gold producers as well. We recently traded Remelius. Unfortunately, we sold that fairly early. We locked about 24% profit in there with our VP members. I wish I would have kept that position, but we want to also lock profits along the way and mitigate the risk in case things turn into the opposite direction, right? Now, let's talk about Zip, of course. Zip is the most profitable stock that we have ever traded in history of BG trading. right? And this is what happened with ZIP. We bought ZIP at $1.58, and we're still holding around 170% profit right now as we speak, right? Still holding that particular stock. Now, strong fundamentals, macro outlook is positive for ZIP, and by the time we bought, was trading a technically discounted price. Now, would I buy now? No, no way. I wouldn't be buying now if I haven't bought it before, because it's trading at very high levels right now. So what we are expecting here for ZIP is that we have a target. By the way, this is a BGS 20 target for anyone that bought at this breakout right there. As for our VP members, we provided an entry right there at the breakout, right? However, we have been holding together with all the VP members since $1.50 back in May. So I will probably be closing my position right there, 155%. And the reason I've been doing this, 187 at the moment as we speak, as you can see right there. The reason we're doing this is because we have enough. You know, we made another fantastic trade with ZIP, and markets are trading at its all-time high, especially NASDAQ. And we most likely will be closing our position at the target, because we wanted to remind you that profit is only profit when it is locked in. The reason we're going to be looking at locking profits, locking this position at this target, or even a little bit below that, is because ZIP has rallied substantially. We are currently holding at 187% profit. That's a compelling profit. In fact, this is the best trade we ever done with ZIP, even though it has been incredibly profitable with different trades before. So this is time to lock in on ZIP and look into other opportunities right there. Another thing I want to highlight here, which I'm a little bit concerned now, is that ZIP's the trading volumes has been decreasing on its upside, and that makes me a little bit concerned that ZIP could potentially at least test its short-term moving average again, which could bring down to $3.71. And honestly, I wouldn't want it to be holding at $3.71. I would like to lock in the profits. And then look at the RSI as well. RSI starts looking a little bit concerning here, and the reason is because we start seeing some bearish formation on the top of this, right? So a little bit concerning on ZIP now. Remember what happened last year with those bearish formations? We could maybe be at beginning of a profit-taking cycle, and we could see a substantial pullback on ZIP, right? Not saying that's going to happen, but if we have a profit, we can lock in and then just wait to see what's the next formation. So few red flags for ZIP as we speak, right? So just be careful with that. And then the last one I wanted to highlight is S32. S32 reached our stop loss, but on this one, and maybe we are what we call a little bit, but on this one, we didn't take stop loss. We bought around $3.80. We had a loss position right now, but we didn't take stop loss because this is a world-class diversified mineral producer. So we're going to be looking at potentially even buying more right there, especially if this double boron formation right there is confirmed. So a potential double boron formation. So we could see a strong reversal from now leading the stock towards its long-term moving average around $3.25. If they happen right now, it means a 23% upside right there. So it's not a bad, and this is conservative, it's not a bad setup if this double shot, so it's not a bad setup if this double bottom formation is confirmed. I think it might take a little bit time, 3, maybe 4 months for this rally to happen, but we have the setup right there, potential formation, and then the ultimate stop loss would be just under this $2.50 here, and that's non-negotiable, because if it breaks down here, then who knows how low it could go, even like $2. We don't want to be on this position if it goes to $2. But now with this setup right there, it looks very interesting. That's why I brought S32 once again for you, even though and sharing with you that we did not take stop loss on this one. We should have taken, but because it's S32, relatively strong fundamentals, and blue chip stock, we just thought, okay, let's hold for now, see how it goes, and maybe even leverage on the top of S32 to buy other stocks as well. Which brings our video to the end.